So let's start from basic. Every candlestick has a simple body structure, that is real body, high, close, open, low, lower shadow and upper shadow. By low and high I mean higher price and lower price, and by open and close I mean opening price and close price. Similar is with the black candle. See, there are two types of candles, which is white candle and black candle. White candle is used for uptrend and black candle is used for downtrend. So we can say that if the close is above the open, that is close price is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlestick. As I told you before, the most trading platforms use white color to refer the bullish candlesticks, but the color doesn't matter. You can use whatever color you want. The most important is opening price and the close price. If the close is below the open, we can say that the candlestick is bearish, which indicates that market is falling. In this session, bearish candlesticks are always displayed as black candlesticks, but this is not the rule. So we saw the basic structure of candlestick. So you can find different colors used to differentiate between bullish and bearish candlestick. The filled part of the candlestick is called as real body. The thin lines poking above and below the body are called as shadows. The top of the upper shadow is high and the bottom of the lower shadow is low. So at the right bottom, you could see the same picture which I have shown you before. So this is the basic structure of the candlestick. There are two types of candlestick based on body sizes, that is long and short. The long candlestick has longer real body and short is vice versa. Long bodies refer to strong buying or selling pressure. If there is a candlestick in which the close is above the open with a long body, this indicates that buyers are stronger and they are taking control of the market during this period of time. Conversely, if there is bearish candlestick in which the open is above the close with a long body, this means that the selling pressure controls the market during the chosen time frame. Short and small bodies indicate a little buying or a selling activity. So let's turn to a next topic, which is candlestick shadows, or also known as tails. The upper and the lower shadows gives us important information about the trading session. Upper shadows signifies the session's high price, that is highest price, and lower shadows signifies the session's low, that is the lowest price. Candlestick with long shadows shows that trading action occurred well past the open and close. We can get a good signal from this about uptrend or downtrend. So here we could see that there is a candlestick with short real body and long shadows. One is long upper shadow and another is long lower shadow. We can say that Japanese candlestick with short shadows indicate that most of the trading actions were confirmed near the open and the closed. If a candlestick has a longer upper shadow and short lower shadow, this means that buyers flex their muscles and bid price higher. But for one reason or another, sellers came into action and drove price back down to end of the session, back near its open price. If Japanese candlestick has long lower shadow and short upper shadow, this means that the sellers flashed their wasteboard apps and forced price lower. But for one or the another reason, buyers came in and drove prices back up and end of the session back near its open price.